Welcome students, welcome to lecture number 11 where we will be seeing module number 3 under subject Indirect Taxation. Is the screen visible, right students?
Yes, ma'am, it's visible.
Okay. Welcome students, welcome to lecture number 11 where we will be seeing module number 3 under subject Indirect Taxation. So module number 3 is time and value of supply. Under this particular module, we have time of supply, which we have already covered in lecture number 8, 9 and 10. We have to see change in the rate of tax in respect of supply of goods or services, place of supply, value of supply, and simple problems on time, place, and value of supply. Problems on time of supply we have already covered in lecture number 9 and 10. So students, today we will be covering change in rate of tax in respect of supply of goods or services and place of supply for goods. So let us first understand what does change in rate of tax in respect of supply of goods or services stands for. Students, many a times the GST Council, what does it do is there are various products in the market which are taxed at different rates of GST rates. So many a times government either increases the rate of tax or reduces the rate of tax. So suppose on a particular commodity, the rate of tax is 18%. Thereafter, the government thinks that no, the rate of tax charge is too very high. So it can change the rate of tax on a particular commodity from 18% to 12%. So when there is a change in the rate of tax, which is the tax rate are you going to apply when there is a change? Are you going to apply 18% or are you going to apply 12% during the period of the change? So what should be the rate applied? Whether old rate should be applied or new rate should be applied during which period? During the period during which the tax rate is being changed by the GST Council. So by this section 14, we are going to understand which tax rate is to be considered when there is a change in the rate of tax in respect of certain goods or services. So when there is a change in the effective rate of tax, we have to identify what is the date of change in the rate of tax. From when does the government specify or notify that this is a particular date from which the rate of tax of GST is going to change? So that date is very important, students, in order to know whether we should apply the old rate or whether we should apply the new rate of tax. So first thing is that what you have to identify is the date of change in rate of tax. Second thing is the date of supply of goods or services. When are the goods or services supplied? Either before the change or after the change. The date of issue of invoice. This is all very important to identify that whether old rate or new rate of GST is to be applied. So the date of issue of invoice, whether the invoice is issued before the rate change or after the rate change. And the fourth thing that is important is the date of receipt of payment. Whether the supplier has received the payment before the rate change or after the rate change. So the time of supply is determined according to the combination of these dates. Once you know the time of supply, then at the time of supply, what is the rate applicable? That will be the rate on which the commodity will be taxed. So let me just once again quickly help you all go through this. Is whenever there is a change in the rate of tax, which means that a particular commodity may be taxed at 12%. Later, the government may increase it to 18% or vice versa. In that case, how to know what is the rate to be applied into a commodity in that particular period of change is you need to know four important dates. That is date of change in the rate of tax, date of supply of goods or services, the date of issue of invoice, and the date of receipt of payment. So by these four categories of dates, you can identify what is the time of supply, and whatever rate is applicable during the time of supply, that will be the rate applicable on the commodity on which tax rate has been changed. So students, let us pay attention. This is very important. Change in effective rate of tax. We have three important dates to remember, students. As I already told you, when the supply of goods services is made, the issue of invoice date, the receipt of payment date, and what is going to be the time of supply. Time of supply means what is going to be the rate on that particular date. That rate is to be applied on the commodity, whether it is old or new. Let us check. So there are 6 scenarios. Let us see. If the supply of goods or services, if the supplier is supplying the goods or services before the change in the effective rate of tax. So before the change happens, if the supply is happening and the issue of invoice also is happening before the change, but the payment is received after the change in the rate of tax, then time of supply means what rate are you going to apply? The rate which is applicable on the date of issue of invoice, that is the old rate, because before the change in the rate of tax. So what is the date of issue of invoice on that particular date? What is the rate applicable? That will be the rate applicable to that particular supply. So just remember, if the supply is before, issue of invoice is before, but payment is received after, then you are going to apply the date rate applicable on the date of issue of invoice. Similarly, second one, if the supply is before, but the issue of invoice is afterwards, the receipt of payment is before, then it is going to be the date of receipt of payment. Supply is before, the issue of invoice is afterwards, receipt of payments is afterwards, then the rate applicable will be the rate applicable on the date of issue of invoice or the date of receipt of payment, whichever is earlier. Next, if the supply is afterwards and the issue of invoice also is happening after the change in the rate of tax, but the payment you have already received before the change in the rate of tax, then the date of issue of invoice is the date on which the rate applicable will be the rate charged. In the fifth case, if the supply is after the change in the effective rate of tax, and if the issue of invoice is before, receipt of payment is after, then it will be the date of receipt of payment. And in the sixth case, if the supply is afterwards, issue of invoice is before, and receipt of payment is also before the change in the rate of tax, then it will be date of issue of invoice or the date of receipt of payment, whichever is earlier. Students, just let me help you to remember this. See, if the supply is before, okay, and the issue of invoice is before and the receipt of payment is after. So whichever is earlier among this thing, whichever is before, you have to consider that rate as the rate applicable to the commodity. So issue of invoice is before, therefore the date of issue of invoice. In the second category, supply is before, issue of invoice is after, and receipt of payment is before. So you're going to consider before one, that is date of receipt of payment. Supply is before and the issue of invoice, receipt of payment, both is afterwards, then whichever is earlier date, and on that earlier date, what is the rate, that rate will be applicable. Similarly, if the supply is afterwards and the issue of invoice is after and the receipt of payment is before, then it will be after. In the case of before, you have to see issue of invoice and receipt of payment, which is before, that will be the time of supply. In case if the supply is afterwards, then you have to see issue of invoice or receipt of payment, whichever is after, that will be the time of supply. Like in this case, it is after, issue of invoice is after, receipt of payment is before. So time of supply will be the date of issue of invoice. Similarly, supply is after, issue of invoice is before, receipt of payment is again afterwards. So it will be date of receipt of payment. And in the last case, supply is after and both are before. So if both are before, whichever is earlier, that will be the date of time of supply, and the rate applicable will be the rate on the time of supply. So let us understand this particular chart with the help of an example, so you'll clearly understand what do I mean by change in effective rate of tax. So we have
Hello.
an example on change in, yes.
Hello, ma'am. Some are waiting to join the class.
Okay. So let us understand an example on change in effective rate of tax. Suppose the tax rate on any particular commodity up to 31st August 2020 was 12%. Later, government said that from 1st September 2020, he changes the tax rate to 20%. So earlier it was 12%. We keep it as 18% students. Because there is no 20% tax rate, we keep it as 18%. Okay. So suppose up to 31st August, tax on particular commodity was 12%. From 1st September, government says that no more 12% will be applicable on that particular commodity. We are going to charge 18% on that particular commodity. So when there is such change, what is the rate of tax that you are going to consider if any transaction is happening between this period? So let us understand. The first situation, services provided on 28/8/2020. That service is provided before the change in rate of tax. The rate of tax is changed on 1st September. So service is provided before 1st September. Okay. Invoice is raised on 30th September. 30th August. So the invoice is raised before the change. Okay. Payment received. But payment is received on 10th September. That is, payment is received after the change in the rate of tax, because rate of tax is changed on 1st September 2020. So which scenario is this? Service is provided before, invoice is raised before, payment is received after. So what is going to be the time of supply in this situation? It is going to be the time, the date on which the invoice is raised. So time of supply will be this invoice raised, that is 30th August 2020. And on 30th August 2020, what was the tax rate applicable? Now if you see, up to 31st August it was 12%. So the tax rate applicable will be 12%. So this is the first scenario that we have seen in the previous slide. That is, if the supply is before, issue of invoice is before, receipt of payment is after, the time of supply will be nothing but the date of issue of invoice. Let us see the next one. Service provided on 28th August. So service provided is before the change in the rate of tax. Invoice is raised on 1st September. That is after the rate of, after the change in the rate of tax, and payment is received on 30th August. That is before the change in the rate of tax. So service provided is before, invoice raised is after, payment received is before. So what is the time of supply you're going to consider in this particular problem? You're going to consider it as payment received, that is 30th August. So 30th August, what was the rate of tax? On 30 up to 31st August, it was 12%. So the rate applicable will be 12%. Next, the third situation. See, we have seen in the case second, if it supplies before, invoice is after,
Ma'am,
payment is before, then time of supply will be the date of receipt of payment. Yes.
ma'am,
Yeah.
in scenario of RCM, what is the time of supply? If goods are, we are importing the goods from outside, foreign countries. At that time, we have to do RCM. No, ma'am? At that time, what is the time of supply? Means when the goods received in India, or the date of bill raised from the foreign countries.
Your voice is breaking. I am not able to understand the question clearly. In respect of RCM, we have a separate concept where we will be dealing with it separately in case of imports and exports. For now, I'll just complete this particular example and then I will take your question ahead.
Yes, ma'am.
Okay? Okay. So in the third situation, what is happening? The service is provided before. before, that is before the change in the rate of tax, that is on 20th August. But the invoice is raised on 3rd September. So it is after the change in the rate of tax. And payment also is received afterwards. That is on 10th September. So in this case, you have to check invoice raised or payment received, whichever is earlier is going to be your time of supply. So 3rd September or 10th September, which is earlier, 3rd September. The time of supply in the third case is 3rd September. What is the rate applicable on 3rd September? From 1st September onwards, it's 18%. Therefore, the rate applicable on the commodity will be 18%. Your fourth scenario is services provided afterwards, because it is provided on 3rd September. Invoice is raised on 5th September and payment is received on 23rd of 28th August. So what is happening here in this case? Service is provided afterwards, invoice is raised afterwards, but payment is received before. So in this case, you have to see invoice raised will be the date of invoice raised will be the time of supply, since it is afterwards, and the rate of tax will be 18%, because on 5th September the rate of tax is 18%. In your fifth situation, the services is provided after the change in the rate of tax, invoice is raised before the change in the rate of tax, payment is received after the change in the rate of tax. So time of supply will be whichever is afterwards. So payment received is afterwards, so it will be payment received, that is on 5th September 2020. What is the rate applicable on 5th September 2020? It is 18%. Moving to the sixth last situation, if services is provided after the change in the rate of tax, invoice is raised before the change in the rate of tax, payment is received before the change in the rate of tax, then what is going to be your time of supply? Invoice raised date or payment received date, whichever is earlier. So 28th August or 30th August, whichever date is earlier will be your time of supply. So it will be 28th August 2020. And on 28th August 2020, what is going to be the rate applicable? It will be 12%. Therefore, the rate applicable is 12%. So this is nothing but how to identify the time of supply and how to identify the rate applicable whenever there is a change in the effective rate of tax. So you just need to compare three things: service provided, the date of service provided, the date of invoice raised, the date of payment received, along with the date when the tax rates are being changed. So depending upon these three particular dates, you can identify the time of supply and the rate applicable. So I hope these 6 pieces are clear to you all. Is it, students? Is it clear? Yes, students? Students, is change in effective rate of tax, is this concept clear to you all? Yes, students?
Yes, ma'am.
So I know it will be tough for you all to remember this, but then like I said, if all the supplies are before, you just check issue of invoice and receipt of payment, whichever is before, that will be the time of supply. And in case of after, you have to just compare between issue of invoice and receipt of payment, whichever is after is going to be the time of supply. So in this way, you can easily remember what is going to be the time of supply in the 6 different scenarios. Okay, Omkar. So what was your doubt regarding this?
Nothing, just
Are you there?
I'm asking. Yeah. I'm asking just that in case of RCM, what is the date of supply? If the goods are coming from the
So RCM is reverse charge mechanism.
yeah.
So in our lecture number 8, 9 and 10, we have already seen that in RCM, what is going to be the time of supply,
Okay, ma'am.
right?
Okay. Hello.
Now next, let us go to place of supply. Now what do you mean by place of supply? Place of supply provisions determines the place, that is a taxable jurisdiction where the tax should reach. Now, place of supply means that particular place or territory or jurisdiction where the tax goes to that particular state government. So it is very important for us to understand what is going to be the place of supply. Reason being, we come to know that which state government receives the tax. Now, the place of supply and the location of the supplier are two important determinants to ascertain the nature of supply. That is whether a supply is intrastate or interstate. So once we know what is the place of supply, and once we know the location of the supplier, we will come to know whether it is an interstate transaction or intrastate transaction. So suppose if the location of supplier and place of supply means where the jurisdiction where the tax should reach, because GST is a destination based tax. Okay, so once we know these two parameters, we can identify whether it is an interstate transaction or intrastate transaction. So suppose what happens, by mistake you have made payment of any tax as interstate, and later you realize it was intrastate. So what you have to do is you have to make the correct payment of tax and take the refund of the wrongly paid tax. So if any interstate transaction is wrongly treated as intrastate or vice versa, the tax paid accordingly, the correct tax will need to be paid and refund need to be claimed for tax wrongly paid. So remember students, place of supply is nothing but it will help you know the taxable jurisdiction where the tax should reach. Next, place of supply in case of goods. See, place of supply is different when it comes to goods as well as services, because we have seen in time of supply that time of supply is different in case of goods as well as different in case of services. Similarly, place of supply is also different for goods as well as different for services. So place of supply is divided into, I'm just talking in respect of goods students. It is divided into section 10 of IGST Act and section 11 of IGST Act. So under section 10, both supplier and recipient is located in India. We have 5 cases to identify the place of supply. And section 11 is in case of imports or exports, in which we have only 2 cases. Now, imports and exports means either the supplier is outside India or either the recipient is outside India. So once again, I repeat, place of supply in case of goods is covered under section 10 and section 11. So section 10, where the supplier, you have to apply section 10 where both supplier and recipient are located in India. We have 5 cases which we are going to see ahead. And section 11 is when either the supplier or the recipient is located outside India, where we have to check in 2 cases. So you have to just apply the provisions and then you can determine what is the place of supply. So let us see section 10 of IGST Act for goods, because I'm specifically telling that today I'm dealing with place of supply of goods only. So students, section 10 subsection 1, you have 5 clauses: clause A, clause B, clause C, clause D, clause E. So these are the 5 cases I was talking about. Let us see what is the nature of supply of goods and what is going to be the place of supply if it falls under this nature of supply of goods. So let us take first subsection 1, clause A, where the supply involves the movement of goods. So students, where there is a movement of goods, the place of supply will be the location of the goods at the time at which the movement of goods terminates for delivery to the recipient. So remember students, where the supply is involving a movement of goods. Goods are moving from, suppose, Karnataka to Maharashtra. So when the goods are moving from Karnataka to Maharashtra, what is going to be the place of supply? Maharashtra, because that is the place where the delivery is going to terminate. That is, after Maharashtra, the delivery is not going to happen further. So location of the goods at the time at which the movement of goods terminates means once the goods are moved from Karnataka to Maharashtra, where the movement is terminating, it is terminating in Maharashtra. So Maharashtra will be the place of supply. So remember students, whenever there is a movement of goods, the place of supply will be the location where the movement of goods terminate for delivery to the recipient. Let us move ahead to subsection 1 clause B, where the goods are delivered to the recipient or any person on the direction of a third person. So the place of supply will be the principal place of business of such third person. Now suppose Mr. X will tell Mr. Y that please deliver the goods to Mr. Z. So here Mr. X is a third person. He's just directing that the goods should be delivered to Mr. Z. So here the place of supply will be the location of the third person. That is a principal place of the third person. That is Mr. X, whoever is directing that the goods should not be delivered to him but to someone else. So whoever is directing the place of supply will be the principal place of business of such third person. In detail, we will be seeing in the succeeding slides. In the subsection C, in the subsection 1 clause C, where there is no movement of goods either by the supplier or recipient. Suppose there is no movement of goods, then what is going to be the place of supply? Location of such goods at the time of delivery to the recipient. So what is the location of the goods when the goods are delivered to the recipient? Then that is going to be the place of supply. So clause C tells that where there is no movement of goods. Clause D, where goods are assembled or installed at site. Many a times goods are, if they're heavy machineries, they need to be installed or assembled at the buyer's site or at a particular site. So the place of supply in case of goods where they needs to be installed or assembled, the place where the goods are installed or assembled will be the place of supply. In my last clause, that is section 10 subsection 1 clause E, where the goods are supplied on board a conveyance like a vessel, aircraft, train or motor vehicle. Many a times when what happens when you go by plane, there are various goods that are provided to you on the plane, like there are eatables that have been provided to you on the plane, there are magazines that are provided to you. So in case of those goods, what is going to be the place of supply in respect of conveyance on the board? It is going to be the place where such goods are taken on board the conveyance. So suppose if there is a flight from, suppose Udaipur to Mumbai, and in Udaipur all the goods are put into the flight and it is reaching Mumbai. So Udaipur will be the place of supply in respect of the goods that are provided in the flight. So let us individually see each and every subclause in further detail. So just remember there are 5 clauses in respect of goods where both supplier as well as recipient is located in India. So clause A, which involves movement of goods. Clause B, direction by third party. Clause C, no movement of goods. Clause D, goods are assembled at site. Clause E, where goods are provided on board a conveyance. Okay, let us understand it further. So let us understand the first case. What is going to be the place of supply for goods under section 10, subsection 1, clause A? That is the first case. First case is what, students? Where the supply involves the movement of goods, whether by supplier or recipient or by any other person. The place of supply, as I already told you, will be the location of goods at the time at which the movement of goods terminates for delivery to the recipient. So let us understand this. From Gujarat, the goods are moving to Uttar Pradesh, and Uttar Pradesh is the last destination in which the goods are to be delivered to the recipient. So Uttar Pradesh will be the place of supply. So here there is a movement of goods from Gujarat to Uttar Pradesh. So Uttar Pradesh will be the place of supply because there is a movement. And in case of movement, what does the provision say? The provision says that place of supply is the location of these goods where the movement terminates for delivery to the recipient. Terminates means comes to an end. Next, let us understand this particular clause with the help of an problem or example. So determine the place of supply. Mr. Roy of Nasik, Nasik is in Maharashtra, sells 20 refrigerators to Mr. Raj of Indore, Madhya Pradesh. Indore is in Madhya Pradesh, for delivery at Mr. Raj's place of business in Indore. So students, you all have to tell me the place of supply in respect of the first subsection. Just understand the question first. Roy is in Nasik, Maharashtra, and he is selling the refrigerators to a particular person called as Mr. Raj in Indore for delivery. Means there is a movement from Nasik to Indore. Goods are reaching last in Indore. So can you all tell me what is the place of business? Is it Maharashtra, Nasik, or is it Indore, Madhya Pradesh?
Indore, Madhya Pradesh.
Indore, Madhya Pradesh.
Now let us see what is the solution. The place of supply is Indore, Madhya Pradesh. So we have, I think you all have understood section 10, subsection 1, clause A. Now let us move ahead to the next clause. Section 10, subsection 1, clause B, second case, which I've already explained, but in detail, let me explain. Where the goods are delivered to the recipient or any person on direction of the third person by way of either transfer of title or otherwise, it shall be deemed that the third person has received the goods. So the person who is directing that the goods have to be given to someone else. So the person who is directing, it will be deemed that he is receiving the goods, and whatever is his location, principal place of business, that will be the place of supply. So your place of supply will be the principal place of the business of such third person. Such third person means who is directing. So see what happens here is, there is a seller and buyer, and this UP buyer is instructing the seller that please deliver the goods to a party in Maharashtra. There is a buyer, there is a seller, but UP buyer what is telling, don't give the goods to me, I am buying the goods, but please deliver the goods to a party in Maharashtra. Actual delivery is happening in Maharashtra, but this UP buyer is instructing, he is the person who is telling on my behalf, please send the goods to this person in Maharashtra. So remember students, the person who is instructing, so here the place of supply will be the principal place of the buyer, such third person who is instructing. So here the place of supply will be UP. So this will be deemed to be delivered. Though it is not actually delivered, under the provision of section 10, subsection 1, clause B, you have to consider it as deemed delivery. Though the actual deliveries happened somewhere else, but deemed deliveries happened in UP, therefore the location or the place of supply will be the location of the third person, principal place of third person who is instructing, so it is going to be UP. So let us see a problem in this. Case 2. You all have to give me the answer. Mr. X, a supplier registered in Uttar Pradesh, having principal place of business at Noida. Principal place of business of Mr. X is in Noida. Mr. X asked Mr. Y of Ahmedabad, Gujarat to deliver 50 washing machines to his buyer Mr. Z, Jaipur, Rajasthan. Let me explain this problem to you all. Mr. X is asking Mr. Y to deliver the goods to Mr. Z. Now Mr. X has his principal place of business in Noida, Mr. Y is in Ahmedabad, and Mr. Z is in Jaipur. So tell me students, what is the place of supply?
Ma'am, Noida.
What is the place of supply? Yes?
Mr. X, Noida, ma'am.
Okay, so let us see the solution. Place of supply is Noida. Now why it is Noida? In this case, the place of supply of goods is not the location of delivery of such goods. Actual deliveries happened in Jaipur, but you have to not consider that. But the principal place of business of third person, so that is the principal place of business of Mr. X is located in Noida. Therefore, the place of supply is Noida. So we have completed with case number 2. Now let us understand case number 3 in detail. So section 10, subsection 1, clause C. where there is no movement of goods either by the supplier or recipient. So the goods are not moving only, the goods are at their own place, okay, and it is not moved by the supplier as well as recipient. So in that case, what is going to be the place of supply? Location of such goods at the time of delivery to the recipient. So here you have to concentrate on the location of the goods, where the goods are located at the time of delivery. That will be the location as the place of supply. So students, suppose, let me give you all an example so that you understand this particular problem correctly. Suppose what happens is I start up my own practicing firm for which I require furniture. As you can see this furniture here, I require furniture. So since I'm just starting my practice, I do not have much capital to invest. So I take this furniture on rent from a supplier. Since I'm taking on rent from a supplier, I am a recipient and the person who is giving me on rent is a supplier. So I have set up, see, this particular office of mine with on rent. Okay, this all furniture is on rent. My practice goes on good and I start earning more of my income. So later I think, why do I need to take it on rent? What do I'll do is I'll purchase this particular setup, like this particular furniture, directly from the directly from the supplier. So now what is happening over a period of 5 years? I am purchasing this particular furniture. Now what is happening, students? The furniture is here itself. Is there any movement of goods? The supplier is now selling me the furniture. I'm going to purchase it, not on rent. So after 5 years, I'm thinking I will purchase all this furniture. So here, the supplier is some other place. I am the recipient sitting in this office. This furniture is here itself. Is there any movement happening? There is no movement happening. The furniture was there and it is still there only. So there is no movement happening. So suppose I am starting up my business in Belgaum. So what is going to be, and the supplier is suppose in, you can say Pune. So what is happening? What is going to be the place of supply? Where this furniture is located, where this goods is located, because there is no movement of goods. So in this case, it is going to be Belgaum, Karnataka, because we have to consider the location of such goods at the time of delivery to the recipient. So let us understand problem number 3. The solution will be given by your. Determine the place of supply. Mr. A, who is in New Delhi, has leased his machine, which cost 8 lakh rupees, to Mr. B, who is in Noida, Uttar Pradesh, for production of goods on a monthly rent of 40,000. So earlier, that particular machine was given on rent at 40,000. After 14 months, Mr. B requested Mr. A to sell the machine to him for rupees 4 lakh, which is agreed by Mr. A. So let me understand, let me tell you all this particular, explain this particular question. What is happening is Mr. A is giving a particular machinery on rent to Mr. B. Later, Mr. B wants to buy it. So there is no movement happening. Already the movement was happened when there was given on rent. So after 14 months, Mr. B is taking it at a value of 4 lakh rupees. Mr. A is in New Delhi and Mr. B is in Noida, which is in Uttar Pradesh. So can you all tell me what is the place of supply?
Ma'am, Noida, Uttar Pradesh.
Yes.
Noida,
What is
Uttar
the place
Pradesh,
of
ma'am.
supply? So the place of supply, solution, place of supply is Noida. In this case, there is no movement of goods and the same will be sold on as is where is basis, means where it is, it will be sold there itself. Thus the location of the machine at the time of such sale will be the place of supply, that is Noida. Now let us understand case number 4, that is under section 10 subsection 1 clause D. Case 4 is where goods are assembled or installed at site. So suppose if any machinery or any production equipment needs to be installed at site or assembled at site. So the place of supply will be the place where the goods are assembled or installed. Wherever the supplier is installing that particular machinery, which place is installing that particular machinery, that place will be the place of supply. So this is just an image of the machinery if it is installed in that recipient's premises. So let us understand this particular Let us understand this with the help of an example, the solution of which will be given by you all. Determine the place of supply. Mr. A, Mr. A is from New Delhi, purchases a machine from Mr. B, who is in New Delhi, for being installed in his factory at Noida, Uttar Pradesh. See here, the purchaser also is in Delhi, the seller also is in Delhi, but his factory is in Uttar Pradesh. So he wants that his machine should be installed in Uttar Pradesh. So will you consider, so what is going to be the place of supply, students, in this case?
Noida, Uttar Pradesh.
Okay. So whether it is going to be an interstate or intrastate, so that depends on the location of the supplier and the place of supply. Now, place of supply is Uttar Pradesh, location of supplier is New Delhi. So whether interstate transaction or intrastate transaction, students?
Interstate.
Interstate. So now did you all get it? In order to determine whether it is intrastate or interstate, you need to understand what is the location of the supplier and the place of supply, and then just check within the same state it is intrastate, within two different states it is interstate. So as you rightly said, the solution, the place of supply is the site at which the machine is installed, that is Noida. Let us understand clause E. So place of supply of goods under section 10 subsection 1 clause E. This is the last case in case of place of supply for goods where both the supplier and the recipient are in India. So where the goods are supplied on board a conveyance like vessel, aircraft, train, motor vehicle, place of supply will be the place where such goods are taken on board the conveyance, where the goods are first put in the conveyance, whether it may be train or whether it may be plane, aircraft, motor vehicle. So wherever the goods are first loaded, the first destination, the first place where the goods are being loaded, that will be the place of supply in case the goods are supplied on board a conveyance. Many a times in train also the goods are supplied. When you go by flight also the goods are supplied, and train also stops at each different location. So what is the location you're going to consider for those goods? It is going to be the place where such goods are taken on board the conveyance. So see, many a times in flight what happens, many goods are being served to the customers. So let us understand what is going to be the place of supply with the help of an example. So this solution again is going to be given by all. Determine the place of supply. Mr. W, an unregistered person, purchases coffee and snacks on board a airjet from Mumbai to New Delhi. The New Delhi flight. The food items were loaded into the aircraft at Mumbai. So students, there is an airjet where which is going from Mumbai to New Delhi, and in Mumbai the goods are loaded. Goods like all the food items are loaded. So in between the journey, someone purchases coffee and snacks. So what is going to be the place of supply in respect of this coffee and snacks?
Mumbai.
So Mumbai. So let us see the solution. The place of supply of goods by airjet to Mr. W is the location at which the goods are taken on the board, in which the goods are taken in the particular airjet, flight or train. So that is Mumbai. So Mumbai is the place of supply. Now, we have understood section 10 of IGST Act, where we saw what is the place of supply in respect of goods where both the recipient and the supplier located in India. We have seen all the 5 cases along with examples. Next. So quick recap is nothing but the first slide that I have shown you. Next. Next, I told you all where either of one is outside India. So that is either it can be export. In export, what happens? The recipient is outside India, and in imports, the supplier is outside India. So in that cases, what is going to be the place of supply that is covered under section 11 of IGST Act for goods? So remember students, if it is an import, if you're feeling that it is an import means now the supplier is outside India and the recipient is in India, then you call it as import. If it is import of goods, place of supply will be the location of importer. And if it is export of goods, then the place of supply will be the location outside India. So is this clear, students? If the nature of supply of goods is, if you from a transaction you come to know it is import, so place of supply will be location of importer. And if it is an export, the place of supply will be location outside India. So let us see examples on this. So problem on section 11 of IGST Act. Problem number 1. M imports electric kettles from China for her kitchen store in Noida, Uttar Pradesh. M is registered in Uttar Pradesh, so the place of supply is Noida. So already the solution also is here. So students, what is happening here? It is an import. Why it is an import? Because Mr. M is Mrs. M is in India. Okay, so it is a case of an import, and in import you have to see the location of the importer, and location of importer is in Noida, Uttar Pradesh. Therefore, the place of supply is Noida. So is this particular clear, students? Is this particular problem clear? Yes.
Ma'am.
Next. Mrs. Lavanya, New Delhi, exports spices from New Delhi to London, UK. So what is the place of supply in this case, students?
New Delhi.
Yes? What is
New,
the place of supply in this case?
New Delhi.
What?
You can.
This is a case of export, and in case of export, the place of supply will be the location outside India. So the location outside India is London. So the place of supply is London. Students, in case of imports, it is location of the importer. In case of exports, it is location outside India. Therefore, London, UK is the place of supply. Here we had clearly seen, right? In case of import, the place of supply, location of importer. In case of export, place of supply is location outside India. So by this, we have completed and understood the concepts relating to the change in the effective rate of tax. Next, we have understood the place of supply only in respect of goods, because in respect of services, we will be dealing with it in the next lecture. So in respect of goods, we have seen if the location of the supply and recipient are in India and outside India. So thank you so much, students. We are done for the lecture for today. Thank you.
Thank you, ma'am.
Now, this